when you consider what's happened to commodities, crude oil is just one commodity. Gold is just one commodity. There was a lot of talk about soybeans and corn. This goes back to the ethanol relationship, but you see how much these markets have sunk. Okay, corn rallied up so strongly on this whole ethanol play. Look how much corn is sold off. That is a huge move. Okay, so what's this symptomatic of? And what I'm pulling up right now is what's called the continuous commodity index. Now there's a number of ways you can pull up an overall look of the commodity market. The continuous commodity index is just but one way to do it. Okay, and what this is reflective of is a number of commodities kind of lumped in. Kind of like you have the Dow Jones Industrial Average. That's an index of certain stocks. Well, you've got something very similar traded on the New York Board of Trade. Okay, with the continuous commodity contract. So in terms of what we're looking at here, someone could look at this and get an idea of what there is in terms of weighting. You can take a look at what's happening here. Now we took a look at crude oil, we took a look at corn. I mentioned those in the same vein as a CI because just as there are certain stocks that are weighted within the Dow, there are certain commodities that are weighted within this index. And sector weighting wise, and we talk about softs, sugar, cotton, coffee, cocoa, orange juice, which is what this question started off as, about softs. Those make up about 28-30% of this continuous commodity index. Okay. Energy, so let's talk about crude oil, heating oil, natural gas, makes up about 18%. And then corn, wheat, soybeans, your grain complex. Now that's not the whole grain complex, but those are certainly the generals, the big players of the grain complex, make up about another 18%. So certainly your biggest sector weighting, if you will, within this commodity contract, continuous commodity index, is softs, followed by a close second, actually, of metals. So that brings us to one of our market pulse contracts, which is the gold market. Gold, silver, platinum, copper makes up about 23-24%. Okay? So you put all these together, your energy, your grains. The fifth component is livestock. So for livestock, you're talking about cattle and hogs. I know we're kind of straying from the Forex topic here, but there is a correlation between commodities in general and pairs like the kiwi. It's not a great correlation. I shouldn't say it's not a great correlation. It's not a super strong one, but it's one that I think is fairly reliable. Okay, I'm going to show you right now. Take a look. I mean, I shouldn't say it's not strong. It's pretty well correlated. Take a look. That's in black. You've got the CCI, the continuous commodity index. Don't confuse the CCI with the indicator commodity channel, the CCI. Don't confuse the indicator with the contract. The continuous commodity index is often referred to as a CCI for obvious reason, but don't confuse it with the indicator. So the CI contract, let's just call it that, the CI contract here, and the New Zealand dollar, US dollar, the Kiwi, take a look at the relationship. There's a really good sympathetic relationship there. So, if you wonder do I keep an eye on the CI with markets like the Kiwi, you can pull up the Aussie here. Is there a correlation? Sure. Take a look. But is the correlation due to, think of also, metals make up a huge part of what makes the Kiwi and the Aussie CommDolls, what makes them CommDolls. So the fact that they are commodity currencies relating back to the metals market, namely gold, is going to account for a lot of this correlation because, again, metals make up, 23-24% of that index, the commodity index. So Thanks for your question there, CVJ. And there's a more kind of thorough look at this relationship.